If you cannot hear me, just quickly talk so that no
No, I
matter.
can hear you, sir.
So let me share my screen. So now we guy in the room. Now
Yeah,
we
I can see you.
guy. Okay. Good afternoon. This is 1:50 p.m. Let's start now. Okay.
Okay.
In our last class we stopped at structure and liquidity. Let me see if your brain is still uh in a full form. Let me put it that way. Let's see if you still remember what we discussed in our last class. Let me try and build it. Have
Yes, sir.
shown me the- Okay. In our last class we talk about structure, right?
Yeah.
And
Yes, sir. Yes, sir. We talk about structure, yeah. Yeah, from the higher time frame to
we'll
the
talk
lower
about
time frame.
okay. Um, I'm on this trade on step index for the ACP. Hello. I'm not going to step index, not fine. Anyway, let's
Hmm.
continue. So,
All right.
talking about liquidity is the areas where uh the what's it called? Okay, what give me the definition of liquidity first. Let's see what here.
To me, liquidity is money, and it's also a trap. It's also a trap for because uh some people buy from liquidity whereby they will be stopped out, and for a person to identify liquidity is the first pullback after a break of structure, the first pullback that market makes. That's what liquidity is before coming back to the demand zone. Can you hear me, sir?
Yeah. Love that. Can you hear me also?
Yes, sir. Yes, sir. I can hear you, sir.
I'm very glad you have. Let's just pull up because of your work. Let's do one or two things because of your work. So, having talked about the major structure and the minor structure in our previous class. So liquidity
O-
is
Okay, okay.
the first pullback after the major breakup. After this impulse move, let me stop this. You see, after this impulse move, yeah, after this long impulse move that we have here, our first pullback is always our liquidity. Now, this liquidity now is
Okay.
going to depend. This liquidity now is going to be either if you're going to use your breaker block as your entry, you're going to use your order block as your entry. Remember, when we talked in our previous class, I talked about the market creating uh, order blocks in all your listing
Yeah, yeah, yeah.
order blocks. Every move, every move you have, market creates order blocks. Every move you have, market creates order blocks. All your moves, even here. So this the other block that the market created here, it's what turns to the breakers.
Yes, I can see it, sir.
So yeah, let's come back to this. So now talking about this liquidity, this particular guy, after this long impulsive move, remember these are break or stop. After this long first pullback, which is our liquidity, and it's going to determine if this guy mitigates this or did not mitigate this and pull back up here, come back, pick our entry and buy back. Or if the market is going to do something like this, it's going to be of two entry points. It's going to be of two entry model. Now, if the market is going to give us something like this, this our liquidity come back to mitigate this guy, go back up and come for our other block and go back. Now, it all depends on this liquidity. It all depends on this liquidity guy for it to determine the kind of entry that we'll be using in our trade, in our setups that we're talking about.
Okay.
So now, in this particular scenario now, this guy here, this liquidity, the guy here, it didn't mitigate this guy. So now, if this liquidity didn't mitigate this guy and it went back up to either clear this previous high or give us 50% and above, if you have to measure it with your Fibonacci, 50% and above, at least it has passed this our 50% zone. You see, this is the 50% zone. This is 1 and this is 0. It's either this guy breaks this guy here, come in between here, in between the premium zone, or on 50%. Are you getting it?
Okay. Yes, sir. Yes, sir.
It's either this our liquidity, do something like this, give you 50%, play around your premium zone, or break the previous high. Now, if the market gives any of this and come back to your PO high, then you can shoot in. But if the market did not give any of this, if the market did not break this previous high and did not dance into this zone or on 50%, then it's going to be a risky trade. If the market gives something like this, definitely you should know that the market is still coming back for this.
All right.
And go back up. That's if the market did something like this. This one is just to give you, what's it called? Just fake it out for you. This is the real thing here. Come back and pick your other block. So liquidity here is more like the fuel, that will power your engine. You understand?
Yeah, I understand, sir. Yes, sir.
So now, the thing is, this liquidity now, you need to be very careful with it. I think I have an example. This is step index. This is step index. I will show you an example. Are you still seeing my screen?
Yes, sir. Yes, sir. I can see it's very clear.
Well, what is it? What is this right now? V10, right?
Yes, sir.
It's showing V10.
I can see the market, the analysis you made, and the BOS.
The trade. Are you seeing the trade? The whole trade and everything.
Yes, I'm seeing the trade. Volatility index 10.
Let me show you something. What I'm really talking about this. Now this is 4-hour time frame. This is where my break of structures is this is my break of structure here. Are you seeing it? To the downside. Now,
Yes, I can see it, sir.
what I really said about the first pullback is this. Now, this first pullback didn't mitigate this break of structure, right?
Yes, sir.
I'm giving you the example of that first thing there. that I showed you. So I'm going to go back to it. I'm giving you the simple example of it now. You see, this particular guy did not mitigate it, and now he did what? He actually came back to give us. Let's measure from here down here. Now, if you see, it actually gives us 50%, and
Yeah. Yes, sir.
now 50%, and it has given us 50% and above down here. Now, what I actually said the last time was, you remember this guy did not mitigate this guy.
Yeah.
It was supposed to mitigate it so that we enter from here, but the market did not mitigate it. Then the market now give us this thing. Let me mark it out for you. This is it. The market was supposed to mitigate this guy so that we enter, but no, the market did not mitigate it. That means this is our liquidity. Then it breaks down this place to 50%. We are coming back for this. Then we sell down.
And sell.
So what's really fueled this what really fueled this setup? Or what do you think I really depend on this setup? What really actually make me spot out this setup here?
First of all, the break of structure, the downside. Then the first pullback is 50%, more than 50% myself.
What really makes me wait for the trade here? Why do you think I'm waiting for the entry here?
Because it is the closest POI to the liquidity.
And then the liquidity did what?
The liquidity is 50% right now, so it's closest to the POI. So that's what makes you use the POI there.
Go back to this our diagram. I can explain to you very clearly so that you understand. Now, firstly, I said this guy here. You see, we are back to the diagram. Are you seeing it?
Yes, I'm seeing it.
Now, this is it. Now, this guy here, this is what happened there. This guy here came. He did not mitigate this guy. But he did not mitigate it.
Yes, he did not mitigate it. Yes, sir.
Up. Not up to 50%. Then he came back a little bit and went up here. Then coming down gradually. Where do you think the market will pick? Is the market going to come? To come for our breakout block or our order? Is the market going to come for our breakout? The order block, which one?
Order block. It will go for the order block.
So this guy
here, the liquidity is not up to 50%.
Not up to 50%. This guy is not up to 50%. And this guy coming down is coming down with focus. So definitely this one is not safe for us. That's what happened here. That's what I'm trying to explain here. That's what happened here. So this thing is just about you understanding your overall structure, taking notes, or putting all your mind on your structures and on your head before placing any trade. Understand what the market is saying. Understand what the market is. You may actually have the whole plan that you may actually get the whole idea of the market is the trend is to buy, the market is buying, blah blah blah. This you may all have all your edge and all your structures in checked. But one thing I want you to understand is always listen to what the market is saying when the market is approaching your POI. Always listen to always watch what the market is saying or giving, the vibe that the market is giving before it triggers your POI. Do you understand?
Okay. Yes, sir.
Always be focused and watch what the market is actually giving out before the market triggers your POI. It is very important. It's very, very important. Very, very important. So now, like I said, we have the two entries now, which you can understand. But I'm not sure yet. Maybe you understand it until I give you assignments. Okay. Until I give you assignments. So the assignment is going to be do I even need to type for you? I need to type. So your assignment is going to be your favorite PA is what? What is your
Actually,
favorite?
US 30.
You're 30 and what? How many pairs do you trade now?
I do trade like 4 pairs. GBP JPY and GBP AUD, then US 30 and NZD USD.
To reduce the trading PS to 2 now, or if possible, 1. I don't know how you're going to
Okay,
do it.
so
I don't know how you're going to do it, but I feel like the PS that give you more money, that's what you should focus on.
actually, I'm even really like maybe because I don't know how to make risk management, so everything like I'm burning my accounts. Anytime I try to backtest, I do get it right. But when it comes to something like using my money, I burn it. And I think that's why I said I think some of maybe structures and some things I do not see clearly. That's what's making me just lose
Let's
the money for nothing.
do it this way.
So
Uh, I'm very sure that USDT is very volatile, right? It's a volatile pair. It's just like the gold and other stuff. Right? So this is what you're going to do. You trade on GBP JPY, right?
yes.
Okay. And which other pair again?
And I said GBP JPY and AUD and NZD USD.
Only USD. Then ZD
So
I'm trying to understand if SND USD is. Let me check if SND
okay.
USD is. Now, this is what you're going to do. Focus on pairs that are less volatile for now.
Okay.
Focus on pairs that are less volatile, like GBP, JPY. Let me check if SND. SND USD is not that volatile also. Yes, focus on SND USD and GBP, JPY. For now, practice them to understand them. So even when you fund or you get a profit trade, you
All right, sir.
actually know what you are doing. This is what you're going to do. Why you analyze and you forward test, because me, I don't believe in back testing. I don't believe in back testing. I actually believe in forward testing. Yeah. So when you forward test, you know the particular amount you want to risk. Now, this is what you're going to do. You'll be risking according to what you know that now you don't have funds now. But to be honest to yourself, you can't afford to risk you can't afford to fund $1,000 now. So this is where you're going to
Yes.
amount that you know that yes, all the that you can actually get to fund. Let's see, for instance, let's say $50, let's say $100. Okay, let's just use $100, or let's use $50 as an illustration here. So now let's say you were able to fund $50. Now, for that $50, you're going to divide that $50 for a week. Now, how many times do you trade in a week? If it is 4 times, if it is 5 times, you're going to divide that $50 to the numbers of times you trade in a week. So if you are done trading for today, if you are the amount that is going to give you now, let's do the illustrations together. Now, if you fund $50 now and you trade 5 times, that's going to be $10. Now,
Okay.
for instance, now you want to take a trade on GBP JPY, you will know that you are not risking more than $10 to get 1:2, 1:3. Now, don't do more than 1:2, 1:3 now. If you are not okay with, if you are not profitable doing 1:5, reduce it to 1:4. If you are not profitable, or if you are not making money on a 1:4, reduce it to 1:3. If you are not okay with 1:3, we reduce it to 1:2. There are some people that trade 1:1 and they make a lot of money. Because I have a friend, that trades just 1:1 and this guy makes money. So if it is 1:2, reduce your RR to 1:2. Fund your $10. Target 1:2. Fund $10, make $20, you are out. Wait for the next day. Fund the $10 again. Focus on 1:2. Same pair, same strategy, same everything. Don't change your PS. Don't change anything aside that GBP JPY and SND JPY and SND USD. Don't change it. Don't change the amount that you are risking, regardless of the profit that you've gotten for that day. In fact, even though you enter a trade and is running deeply in profit, the next day you are still risking that same $10. That's how to grow an account. And that's how to put your emotions.
I understand you, sir. So in a scenario that it is maybe like maybe I buy a Profem account.
It's the same thing now. If you are buying a Profem account, there will be a daily drawdown and there will be a maximum drawdown. You see, just forget about that maximum drawdown. That daily drawdown is going to be your capital, and you are going to divide that daily drawdown according to the weeks you want to trade. If you want to take the trade for a week before you pass it, or even forget the fact that you really want to pass it, just trade according to your plan. Now, let's say for instance that you you have a $10,000 account, and your daily drawdown is it do they do 5? Is it 5% you do on $10,000 account for daily drawdown? Yeah, I think 5%, which is $500. Now, $500 divided by 5, divided by 5. Now, remember your daily drawdown is $500. Now, you are going to divide it by 5, which is if you are trading 5 times a day, or if you still even want to trade it more. Now I'm actually telling you what I do. So I don't trade Profem. I'm actually telling you how I handle accounts for my investors and other people. Now, if I'm trading if I'm trading a Profem, or this is what I'm going to do. I'm going to divide the daily drawdown by 5, which is $500 divided by 5. That means I'll be taking 5 trades in a week. Now, it's very possible for me not to see any trades to take today, and tomorrow I might see a trade to take. It's still part of it. Can you understand? Now, if
Yes.
the first day you don't forget, the first day you are risking just $100. Remember, you are risking just $100 on the account. just $100 because you only have 5 shots. Just $100. If your first $100 went south, close it. Once it hits your SL, close it. Wait for the next day. Don't forget, let's just say you are risking 1:2. You are risking $500 to get 1,000. Now, if the second day is TP, you recover the first one. You are still in check. Third day, you are still risking that same $100. You are not changing your risk. You are not changing your peer. Just that. I don't trade multiple peers now. I only trade 2-3 peers, and I'm okay. It's not about trading multiple peers. It's not about jumping from one peer to another. Trust me, all strategy works. It's just how you handle them. Your risk, your emotions, your psychology has to be in check. It all depends on the trader that is answering the whole thing. It is when you start to understand that, yes, it's all about numbers. Sit down and understand this whole thing. Then you are good to go. Do you understand? So it's
Yes,
going
sir.
to be the same thing. You risk $100 today, you lose. You risk $100 tomorrow, you lose. That means you've lost $1,000. And you've lost $200. Then the third day you make a win, 1:2. The fourth day you make a win, 1:2. The last day you make a win, 1:2. It's piling
Yeah.
up. You are approaching your what's it called, target gradually. Then you continue the next Monday. That's the next week. Same thing. You are risking, even if your portfolio is reading, even if your target is reading few amounts to pass that profile, you are still this thing is too. You have to still be in check with it. You still follow your rules. That's where discipline comes in. I took a trade yesterday. I took one trade yesterday on V25. So I now went to smaller time frame and I saw this very good opportunity. My mind was like, guy, stack. Trust me, the trade actually went well. The trade went well. But I was like, if it was me before, the kind stack where I go stack, but I just overlook it and I still my this thing. And the trade still went well. Now imagine that, okay, I stack, and this thing reverse a little bit, clear all my accounts and start moving in my direction. What will you think? I'll just blame myself. Normally,
Yeah.
I don't start again. I only place trade and forget it to run. So I'm not saying people that are stuck, they are doing something bad. I'm only talking about myself. Yeah, I'm only talking about myself. I'm only referring to myself that I don't start anymore. Then you know how I start now. I can open 50
Sure, sure,
positions.
sure,
You know
sure. I remember last time. I remember that time that I came to your DM. I texted you and I see that the RR used to stack on your account like you do. I
my
remember that time.
RR on 1:3, but you see within that 1:3 guy, I don't make bastard money. I used to stack, but I just figured out that most of my stacking always end up me losing money. So I feel like let me just trade normally and even see how it goes. Then trading normally, just place one single position, risk the amount you want to risk, and just get your profit and get out. And that's what actually changed the whole thing. So just make sure. Don't worry. When you fund, let me know. At least my DM is always open. Let me know when you fund. If you get improvement, let me know. I'm going to draft.
Yes, yes. I'm trying to get it so soon.
I'm going to draft out the way you're going to take trade on that profile, and trust me, you will definitely pass it yourself. I don't even need to trade it for you. In fact, I'm not even going to trade it for you, but you pass it yourself.
Yeah, I understand. I really appreciate you both. Like, thanks so much. And I want to ask about something.